Keep an eye on that on your next statements, something to check and be mindful of. Financial advisors say it's time to recalibrate that cash hoard and any borrowing. If you're thinking about bigger purchases or taking out financing, for the first time in 4 years, the Fed has cut interest rates. This is a huge deal for the US economy, both for consumers and small businesses. Now, you may know the general trend of what's happened, but in this video, I'm going to outline some specific things you should be aware of. If you currently have money in a savings account, if you have money on credit cards, what this means if you have an existing loan or line of credit, or if you're thinking about taking out a business loan or line of credit. I'll talk about things you should know based on this trend right here. Biggest news as it relates to rates in 4 years. I'll keep today's video short. Thanks for subscribing, turning on alerts. And if you're interested in financing grants, credit for you or your business, there's 11 grants due soon that you can apply for on the Skip dashboard. A few new ones and some that Skip can apply to for you. That's all on the Skip app or helloskip.com. Link is in the description. That's the #1 marketplace for grants and financing. Here's what came out in the Wall Street Journal. I'm going to tell you what's been covered here. They did a great job. Then I'll give you the few tangible tips you should be thinking about. Here's the Fed funds target rate over the past couple decades, but let's focus on the last 5 years. From around 2.5%, COVID hit, rates dropped to basically zero. This is when a lot of you took out mortgages or pandemic-related loans such as the EIDL loan program. 4 million businesses took out EIDL loans, 30-year loans at 3.75%. Then rates started going up at a rate we've never seen before to combat the inflation that we saw across the US economy. They've been going up for a few years now, flat for the past several months, and today rates dropping by 0.5 percentage point. It was largely assumed that rates would go down today, and Jerome Powell spoke about this earlier. It was unclear though if it would be 0.5% or 0.25%, something a bit more conservative. But the Federal Reserve voted to lower interest rates by 0.5 percentage point, opting for a bolder start in making these rate cuts. And quarterly projections released also showed that a narrow majority of officials penciled in rate cuts by at least 0.25% each at meetings in November and December. So we could see this target range go down to 4% by the end of the year, or even lower. Overall, great news for consumers and small businesses. In its policy statement, the Fed said this decision reflected, quote, greater confidence that inflation is moving sustainably toward 2%. That's the key benchmark. How do you keep inflation at 2% while having employment and new jobs remain strong? That's the balance the Fed is trying to maintain. The decrease should provide some immediate relief to consumers with credit card balances. Any of those variable balances should go down soon. Same thing for small businesses with variable rate debt. Do either of those affect you? Let me know in the comments. Same for long-term borrowing costs, everything from mortgages to corporate debt. Some of that has been lowering in rates in anticipation of these cuts. Jerome Powell, the Fed chair, had previously said rate cuts are going to happen. The only doubt has been that the job market has been softening a little bit. Unemployment rate, while still low historically at 4.2%, is up from 3.7% in January. That is the main concern folks are keeping an eye on. But here are things to keep in mind with this rate cut and future rate cuts. Remember how savings accounts, both for individuals and businesses, have gone up substantially. Many banks giving you 4%, 5% interest. You could park your money there. A better alternative to other mechanisms. Well, it's almost certain that lower interest rates will come on these high yield savings accounts and money market funds, likely within days or weeks. Keep an eye on that on your next statements. Yields on certificates of deposits have already started dropping. Something to check and be mindful of. These past couple years, Americans piled trillions of dollars into savings accounts and money market funds. When rising interest rates made cash more appealing, you'd park your money in one of those savings accounts instead of the stock market or something else. A lot of you have foregone taking out a mortgage or various loans for cars, personal loans, business loans, because of these high interest rates, putting any money you have in these high yield savings accounts. That's going to change. Financial advisors say it's time to recalibrate that cash hoard. For the cash you decide to keep, you should shop around for the best place to store it. So with this shift we'll see in the coming days, weeks, and months, many of you will return to buying stocks. But again, and this is not financial advice, you should only go after stocks if you plan to hold them in the long term. Short-term mindset's going to get you into trouble. Also keep in mind, banks aren't legally required to notify you when the interest rate is about to change on your account. So don't expect that same level of communication about lowering interest rates. Yes, they were all emailing you saying, we've got 4%, 5%, come here, come here. Don't expect the same proactiveness when they tell you they're lowering your rates. So that's something you should keep an eye on for any accounts where you have your money. That includes business accounts as well. And speaking of business accounts, for all of you with the businesses, you may be wondering when is a good time to go after business financing, whether that's a term loan or a line of credit. Well, as part of this rate cut today, you should start to see soon in the coming weeks and months some lenders factoring this in, lowering rates, giving you a better option if you decide to take out a business loan. The same is true for mortgage interest rates in the coming months and any borrowing. So keep an eye on that if you're thinking about bigger purchases or taking out financing in Q4 or even Q1 of 2025. If you think this is good news for you, hit the thumbs up button. I'll keep you informed on these big macroeconomic changes since they affect everyone in the US. Thanks so much for subscribing, turning on alerts. Let me know in the comments what you plan to do based on this news. Most importantly, stay well, stay healthy, and I'll see you in the next video.